Yo, what's good? Good morning, y'all. How y'all doing?
Demoniacal creatures with huge canine teeth who bite deeply into the necks of their victims. Froth and gorge on blood. Warm human blood.
And I just didn't wait. We do have big news coming out. About 9 o'clock. 9 my time, so I cannot be in trades when that time comes. There's a big news impact. I will not be in it. Hopefully the shit moves before that. So we'll see. It's about 6 minutes. Mark some shit up right quick. Yeah, that's up there. Around this area-ish. Alright, now we wait 4 minutes or so. Alright, yeah, another minute. Hopefully this holds off. Just fucking bust down before market opens. Damn, 30. Come on now. Don't do this yet. Market's not open yet. I'm gonna pull some shit already. Ten seconds. Alright, here we go. I didn't take anything, so it's the very first start of the open. I ain't trying to get faked out. Man, this thing want to push. Risky trade here. Okay, okay. Here's target one. Take that out. Yeah, we're gonna come for those. Man, there she went. Should have held on to her. She's gonna get up here. Hey Nasdaq, keep it up here now. 5-minute candle close. Keep the momentum. What up, Coda? He wants to get above that, I'll take it, but Nasdaq's going. US 30 wants to push. Beautiful. Come on, keep it up there. Come on, Dirty. What are you doing, man? Get it up. Come on, 30. Now it's your turn to pull through for me. Nasdaq did it twice. Nasdaq's not gonna do it for me, huh? Damn, man. Or 30's not gonna do it for me. Come on. Hold it up there, 30. Come on. Come on, 30. I should be out of this trade, but I'm holding on to it. I got faith in it. Come on, 30. Come on, 30. You can do it. Nasdaq's running it up. Come on. Your turn. Come on, get up to these fucking highs up here, man. Get it up to them. Get to my target one. Come on. Go, 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 go. Get it, get it, get it. Come on, 30. Get it, man. It's holding it up. Come on. Get up there. Run it. Come on, 30. Don't do it to me now. Get up there. Don't do it to me now. Get up. Come on. Damn, really, 30? You gonna do me like that, bro? Really? Get up there, man. Get it up. Let's get it. Come on. Come on. This new shit's coming out soon. I'm not gonna be in positions. Ah, you fucker. Come on. Hold it up. Damn, 30's gonna make me lose it all. And make me give it all back, huh? It's holding it though. Like I wanted to add down here. Do I want to make another add on that though, man? Fuck. I kinda do. See if I can get back down in this area. I might take another one. Run it up. Get it. Go for it, man. Go. Get it. Get this shit. Take a little off the top. There we go. Pop up. Pop it up. Pop it up. I should have took the other one when I had like about 30 on it. It's alright. Come on. Got like 10 minutes. I do not want to be in this shit. Let's get it. Come on, get up, get up, get up. Okay, now pop up. Pop it up. Go, go, go. Pop it up. Come on, Nasdaq's going. Let's go. Get that shit up, man. Come on, just give me something to get out of it with. Fuck. Nasdaq's strong, man. Come on, 30. What the fuck are you doing? Jesus. Nasdaq looking good as fuck. You over here looking like ass. Come on, 30. What the fuck, man? You're gonna dump this bitch down on me, aren't you? You motherfucker. That's all I wanted. A little some. Come on, man. Come on, man. Get me out of these trades. Hurry up. Pop it up for me. Like 5 minutes and I'm out. Come on. Get this shit up here a little bit. Come on, get it. Get it. Get up. All right, now give me this one. Come on. Come on, man. Fuck, I just might get out of it, dude. For real. I don't want to be in this very much longer. Come on, just pop it up for me, man. I can't get over this area. It's not looking strong. Come on. Pop it up for me. Get it, man. Get it. Keep it below that candle body. If it takes it, it takes it. I don't care. I'm about to get out of this shit soon anyway. Yeah, I'll take it. Oh. Still in it? Oh my goodness. Okay, pump this up. Don't go for that yet. Don't do it. Get it up. Get it up. Don't go for this gap yet. Pop up first. Come on. Pop it up first. Come on. Get above those wicks, man. There you go. There you go. I like how it broke this trend line down on these wicks right here. It's a good sign. But can it go? Now I can move this. Come on, man. No, get it up. Come on, man. I got like 3 fucking minutes. I'm out of this shit. Get it up there quick. Just pop it up for me. Come on, hurry up. Come on, 3 minutes. I got 2 minutes and I'm out. Just give me a nice pump up for me. Come on. I gotta get like 25, 30 to break, 20 to break even. Just cause fees. If I lose it, I lose it. It is what it is. I don't care. But it's only 60. It's gonna fill this gap now. Yeah, that's okay. That's okay. I'm still up a couple hundred. News is gonna be coming out here shortly. Well, 8 minutes or something, some shit like that. NASDAQ hit that target up there. And hit a target 2, almost a target 3. Hit London highs. Yeah, I got news coming out in like 7 minutes. I can't be in. Big news coming out in 7 minutes. I'm not in it. Fill that gap. I should have just took it out here. Almost broke it even, basically. It is what it is. I was hoping to get up over this wick. I wish I could take these fuckers off, man. I hate this shit, man. All these fucking triangles piss me off. All right, I cannot play any trades. 5 minutes until the news comes out. We'll see what happens. I might not even trade anymore today. Oh, Powell. Powell's speaking. Yo, Powell. Whoops. It's not what I want. Hold up. He's not live. Nope. Guess it's not live. Wait, I think this is it. I think. Yeah, this is it. God damn it. And we're off. This should be starting, I would think. Can I be in anything right now? 5 minutes after. We'll see how it's going. But as of right now, I will wait. Mm-hmm. Maybe.
Good morning. This committee will come to order. Chair Powell, thank you for being with us today. I appreciate your willingness to have a chat with us about some of the really important issues facing our country. Without question, the Federal Reserve serves a critical role in the function of our government and the global economy. You have the ability to influence markets and directly impact the financial future of hundreds of millions of Americans. That is why the Federal Reserve is supposed to be an independent institution free from politics. But in recent reality, the Fed has been susceptible to political pressure. Take, for example, the Fed's involvement in the Network for Greening the Financial System, a group dedicated to green financing and climate change, which the Fed joined in December 2020 as President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB, how can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics,
Watch market drop.
2/3 of Americans have less than $1,000,
Watch
in
market
their
drop.
savings accounts. But there is good news.
But
Things
there's good
are
news.
going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable
Bitcoin.
practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs, here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony, and I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans in Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view. about what the law ought to be. But under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve Supervision Manuals to remove reputational risk as a tool to weigh in on political topics.
I'm happy to make that commitment.
Yeah, these markets ain't moving.
Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things.
Yeah,
So it
these
wasn't-
markets
it
ain't
wasn't
moving,
actually
man.
particularly fair to the employees to say you violated
probably
our
won't
practices in
Do
some way. That wasn't
much
really what
until
happened. What
after
happened
this
was,
is done.
I would
Whenever this
say,
is done, I
a
don't know.
lot of focus on
Ain't
process,
gonna be
on
around
governance and controls, and not
to
enough
find
focus
out.
on
I made my
basic
trades.
bread
New York
butter
Open.
banking, credit risk, liquidity risk, interest rate
The only
risk,
time I would
things
trade
like
it
that.
with big accounts
So,
is New York
as we
Open.
discussed yesterday, we
Don't give a
took
shit about
very
anything else.
substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
Bitcoin's
This
not
is one of the
moving.
areas where you
I would
see
have
the
took Bitcoin break.
approach to
This
looking
is
at safety and soundness. And
not moving
the
at all.
number of MRAs and
Not
MRAs
moving.
that when really
well.
documented, but no action was
Till next time. Till tomorrow. You have a good one.